Hi everyone, it's Adam Coburn here and thanks so much for checking in. We are looking today at the real estate market data for the month of September 2022, comparing it to same month 12 months ago and 2 years ago. And overall, the Wellington market continues to stabilise, but after recovering to the same number of sales that took place 12 months previously in August, we are back down to quite a low level compared to 12 months previous of sales in September. So that's an interesting one. So market overall continues to stabilise with the caveat that sales volumes are still down. I still encourage buyers to get in amongst it. Don't wait for things to get better. This is probably as good as it's going to get. Let's look first at the median sale price. And so September 2022, 820 versus 850,000 in September 2021. That's a downward shift of 4%. And I say only 4% because in recent months we've been seeing considerably bigger drops when compared to 12 months previous. But remember, it's the median. It reflects not only the underlying values but also the mix of properties being sold, so we don't read too much into it. It does bounce around a bit also. That being said, if you look at the overall trend, you see the blue bar chart there. You can see median prices have been falling for 6 consecutive months until the last month, where we actually saw an increase from August to September, a significant uptick there. Is that just a blip? Only time will tell, but certainly at this point it looks like we might be levelling off, as the rest of the data kind of indicates. If you follow these videos, you know that I think that the house price index from the Real Estate Institute of New Zealand is the best guide to underlying property values. So let's now take a look at that. And so for the Wellington region, fall in underlying values of almost 1%, 0.9% over the last month, a fall of 4.3% in the last 3 months, and 17.3% over the last 12 months. That, of course, is for the whole Wellington region. Breaking it down into the 4 territorial authorities, you can see there that Wellington City has only fallen by 1.2% in the last 3 months. So again, in earlier videos, we've been commenting that the price falls seen in Wellington were earlier than in the other territorial authorities, the Hutt Valleys and Porirua. So in the city, we fell earlier and steeper, and then the Hutt Valleys and Porirua fell a little later and initially not as fast, but then they caught up. And if you look there, you can see that again. Wellington overall gone backwards by 4.3% over the last 3 months, but Wellington City only by 1.2%. Now, is that even statistically significant? Maybe not. It could be just random variation. So broadly speaking, over the last 3 months, Wellington City has retained a stable value, or almost stable value, over the last 3 months, compared to Porirua City, down over 5%, Upper Hutt City down over 7%, and Lower Hutt City down almost 9%. So, and again, if you look at the 1 year numbers, you can see that all of the regions are bouncing around the same sort of numbers. So over 17% for Wellington region overall, and then 17.6, 17.5, 17.8 for Porirua, Upper Hutt and Wellington, and the Lower Hutt City is the one that's really standing out there at down by almost 22%. So yeah, prices in Wellington City almost level the last 3 months, and Hutt Valley and Porirua perhaps now slowing down, as you sort of can see by looking at those 1 month numbers. And again, if you look at the graph of the Wellington House Price Index graph, the blue line is the monthly and the orange line is the 3 monthly. You can see a distinct recovery there from falling up to about 10% over 3 months to a consistent recovery up to where we are now at less than 5% falls over the last 3 months. And that, of course, is for the whole region, and it varies by territorial authority, as we've just discussed. Now let's look at the number of new listings. How many listings coming on in the month? So 515 for September 2022 versus 689 a year ago and 602 2 years ago. So this is a significant drop in the number of new listings coming to the market compared to 12 months ago. If you look at the graph again, you can see those blue bar chart. The number of new listings has been roughly stable for the last 4 months. So why is it a big drop all of a sudden compared to 12 months ago? Well, this is the fact that we have seen no spring rush this year. Ordinarily, we would see listing volumes start to increase significantly from the depths of winter as we come out into September, and this just has not happened in September this year. So compared to September last year, where we saw a big uplift, we have not seen any such uplift. And so as a result, 25% fewer listings come to the market in Wellington region than a year ago. This, of course, represents a significant kind of tightening of new stock compared to what's normal for this time of the year. And we are seeing a little bit that is coming through in a little bit of buyer frustration, because buyers have been waiting for a spring rush, which just hasn't happened. And so they're frustrated because they're not seeing the number of new listings that they're wanting to. And this, of course, is providing some support for market prices. This next graph is a new one I haven't covered in these videos before. And what this does is it shows the number of new listings in the month compare as an increase or a decrease compared to the 12 months prior. So if the blue bar charts or the red 6-month moving average is above the horizontal line, above the zero, what that means is we were bringing on more new listings than 12 months prior. And if it's below the line, it means fewer. So overall, you can see over the last 18 months, since about since 2 years ago, really, since the late in 2020, we've seen more listings generally coming to the market than we saw 12 months prior. That's at least on the 6-month basis. There have been a couple of exceptions there, and September 2022 was one of them. So you can see there, down by 25%. It's the first time we've seen a significant drop in the number of new listings compared to 12 months prior since August of last year. Other than that, we have not seen a significant downshift. It's been predominantly increase in listings. So this is a sign that, again, is going to support market prices. If we've got fewer new listings coming to market, this is not conducive to prices continuing to fall. So more evidence that indeed the market is likely to continue in its stabilising pattern. How many sales we've seen taking place, and this is a bit of a change compared to last month. Last month, you might recall that we saw about the same number of sales taking place in August as we saw in August last year. Well, in September, we're back down to quite a significant drop. And so this is the odd metric out, if you like. This is the one metric which does not suggest a firming, stabilising market. If we're seeing fewer sales taking place, that would suggest a softening market. But nonetheless, in September, and you've got to take it with a little bit of a grain of salt, because it is just a 1-month data, but compared to last September, down 20%. So 525 sales versus 657 last year, and 771 in September 2020. That's coming out of lockdown, of course, so let's just throw that one away, because that was a ridiculous time in the market. But still 20% down on the same time last year. But as I say, we have seen it's been stable over the last 3 months or so, but compared to last year, where we saw an increase taking place as a result of perhaps more listings partially. Now again, if we look at this other graph, which is showing us what are the number of sales as a function of either an increase or a decrease compared to 12 months prior, and since late of last year, so roughly over the last 12 months or so, we have seen significant drops in the numbers of sales taking place compared to a year prior. Clearly see that in the blue bar chart, and the red line shows the overall trend. So interestingly, that red line does show it seems to have dipped, and we are recovering a bit. So if we look in the last 3 months in that blue bar chart, July 2022, a little less than 20% down compared to July 2021. August 2022, almost level with August 2021, and September 2022 back down to 20% lower. So was August just a blip in the data? Are we sort of establishing ourselves now at 20% lower, or are we going to head back towards zero? Only time will tell, of course. So that one's a bit of an interesting data point this month. How long has it taken to sell property? So 56 days in September versus 41 a year ago, and 26 back in September 2020. So look, that's still long compared to the last couple of years. But again, look at the last few months in that chart there. The blue bar chart is showing the last couple of months. We have seen a consistent drop down from about 61 days to where we are now at 56. So overall drop of 5 days. So it's still high, but it has been reducing for the last couple of months. That, of course, is good news for vendors. If we continue to head that way, it means it generally is not taking as long to sell. But of course, predicting the future, very, very difficult. What about inventory? How many weeks worth of supply have we got on the market? Again, look, at 18 weeks versus 7 a year ago and 2 years ago, it is still a lot of inventory. But compared to the last couple of months, again, we have seen significant reductions. Down from, I think it was 24 weeks worth 2 months prior in July to 21 in August, and here we are at 18 in September. And again, that red line shows there, that's the 6-month moving average. Over the last 6 months, it seems to have stabilised at just over 20. So maybe we've seen the peak in terms of the amount of inventory on the market. Does seem to be heading back down again. How many listings have we seen? Number of listings on Trade Me overall. So this is not new listings, it's gross volume of listings. Look, still high compared to a year ago, 2,460 in October versus 1,400 a year previous, 76% increase or 106% increase over 1,196 in October 2020. But again, you look closely at that last 6 months in the graph there, the blue bar chart clearly shows that over the last 6 months it has consistently falling. Now interestingly, over the last week we have seen an increase. So perhaps we have now just started to see a very late minor spring rush in increased listings coming to market in spring. But gee, it's now the 19th of October as we record this. This is very, very late for a spring rush, 9 weeks till Christmas. So it doesn't look likely that we're going to see a really big rush for spring unless it all comes on very, very late. We may have seen the bottom, the trough now of new listing of listing volumes rather on Trade Me as it starts to increase a little as we head towards Christmas. But generally, yes, over the last 6 months or so, it has been consistently falling numbers of listings on Trade Me. So again, that indicates a generally stabilising market, certainly not falling values. So all of these things tend to suggest that we are in a period of stability. Wellington City has been in a period of stability for a few months now, and it looks like all the data sort of suggests that perhaps the other territorial authorities in the Hutt Valleys and Porua may just be starting to hit that period of more stability. But obviously, very difficult to predict the future, only time will tell. So look, folks, in summary, Wellington values are stabilising, new listings volumes are quite low and stable and level at quite low volumes. Sales volumes are down this month compared to what we saw a month ago, but overall do seem to be plateauing. Duration to sell remains quite long, but not as long as we've seen in the last couple of months. Similarly, inventory still quite high, but seems to have been reducing over the last couple of months. Trade Me listings still high compared to 12 months ago, but consistently fallen for 12 months straight. All of these things to me suggest we are entering into a stable period in the market. Buyers, I still encourage you to take advantage of these conditions while you can. If you can raise the money and you'll find the house you like, go ahead and grab it. There's a good chance it won't get better than this. Overall, the Wellington market does seem to me to be continuing to stabilise. This is Adam at Low & Co. Thanks so much for checking in. See you next month.